to record a journal entry, analysis of a transaction, transaction number 6. Sold goods returned by the customer rupees 1000. How to record this transaction in a journal entry form in the journal? Let's analyze the transaction in terms of increase and decrease. When goods are sold to customer, they are known as sales. When the goods which are already sold to customer are returned by them, will be titled by us as sales returned and allowances. We call such goods sales return and allowances because they are returned by the customer. So this is the account title which we will use for this transaction. We always assume that the goods which are sold on credit are returned by the customer. So when we sold the goods on credit to customer, we termed it as account receivable. Now because the money is not received from the customer, we had not received cash from the customer and he is returning us the merchandise. Therefore, we will say that this much of account receivable will not be recovered by us. We have to reduce or decrease this 1000 from the amount which is already receivable from the same customer. Those accounts which we have to engage in this transaction will be sales return and allowances because the goods sold are returned, and account receivable because we assume that the returned goods are always those which were sold on credit. Now let's see their nature. Sales return and allowances, contra income, account receivable, asset. Contra income means the opposite rule of income will be applied. The opposite rule means whenever income increases, it's recorded in credit. Whenever sales and return allowances increase, it will be recorded in the debit. Let's talk about the transaction. Sales return and allowance is a contra income because it's increasing and the opposite rule of income will be applied. Therefore, it will be recorded in debit. Account receivable is an asset. Because this asset is decreasing, therefore it will be recorded in credit. The customer who has to pay this money to us, from whom we have to receive this money, will now not be paying us this money. We will not be receiving 1000 from him. Therefore, our account receivables are decreasing. Decrease in account receivable, which is an asset, will be recorded in the credit side. Rules of debit and credit says decrease in asset, credit the account. Therefore, our journal entry will be sales return and allowances debit, account receivable will be credit. Date will come here, proper specimen of journal will be followed. Explanation or narration of the entry could be goods returned by the customer or merchandise returned by the customer. That's all about it. Like, share, subscribe. Commerce Lecture